Hey everyone, welcome back to the channel, and if this is your first time, I'm glad to have you here. Today we're going to be talking about Hey everyone, welcome back, and if this is your first time, I'm glad to have you here. Today we're going to be talking about questions you should be asking yourself before you get involved with any type of investment. Where do you start? We'll cover that and much more. And just so you know, this video is going to be the start of many more to come that will help you gain confidence when it comes to investing. My name is Josh. Welcome to Your Financiation. First off, what is investing? Well, to put it simply, investing is putting your money into an asset in the hopes that that asset will appreciate in value over time. You're either going to receive income from that asset or you're going to sell it in the future for a higher value than what you bought it for. This is going to be the primary way that you're going to generate wealth for the future. An asset can include things like stocks, also known as equities, bonds, also known as fixed income, real estate, or commodities, things like oil or gold. Now in the future, I'll be doing a video that covers all these different investment types. Now I have a very simple 3-step process you should take before getting involved in any investment. The 3 steps are: set your goal, know your risk tolerance, and find an investment that aligns with your goals and risk tolerance. Simple, right? If you write these 3 things down, you'll have a better understanding of where you want to invest your money. At the end of the video, I'll provide a questionnaire that you can use to help you determine what investment might be right for you. Now I'm going to break up the rest of the video into 4 main sections, and those sections are goals, risk, timeline and investments, and taxes. Number 1, define your investment goals. What are your goals? The first step when it comes to investing is to figure out what your goals are. It can be anything from planning for retirement, saving for your kids' college fund, buying a house, or just building wealth. Come up with a plan for each goal that you have. Do a little research into how much you're going to need to reach your goal. Set a timeline so you can decide how much you should invest and how often. Break up that goal into payments you can make every single month. Have that payment be part of your monthly budget. If you haven't seen my video on budgeting and saving, be sure to check that out. I'll have it available to click on at the end of this video. Number 2 is assess your risk tolerance. Risk tolerance is just the level of risk you're willing to take as an investor. Risk involves losing some or all of what you initially invest. But the opposite is also true. You have the potential to earn much more than you would if you were just saving. It's important to understand that every investment comes with some level of risk. So if you see something online like some advertisement claiming little to no risk with big gains, avoid getting involved because it's more than likely some type of scam. Generally speaking, if you're younger, say in your 20s, you have the ability to take on more risk than you would if you were older, and that's just because you have more time to build that wealth. In next week's video, I'll be covering more related to risk, and we'll talk about things like types of risk you'll be exposed to when investing. We'll talk about investment types, like a general overview of investment types and their associated risk levels. And we'll also talk about some main strategies that you can use to reduce the amount of risk that you're exposed to. Number 3, timeline and investments. It's important to understand that investing is a marathon, not a sprint. That's not to say that you can invest for the short term or have high risk plays, but you should never invest money that you can't afford to lose. Now at this point, if you're telling yourself, well Josh, I can't afford to lose anything, I hear you, but you have to be willing to take on some level of risk. Otherwise you won't be able to generate the kind of wealth that you're looking for in the future. Investing is the best way to do that. You should also be asking yourself, how active or passive do you want to be in handling your own investments? This will help determine what investment type is more suitable for you. If you want to be more passive with your investments, you might think about investing in mutual funds or ETFs. Those might be more in line with how you invest. And don't worry, I'll cover in a future video what exactly mutual funds and ETFs are. If you want to be more active, you might find that individual stocks might be a more attractive investment type for you. Be aware that there's a certain level of research you should be doing before getting involved with any company. I'll cover in a future video some educational tips that you can use for fundamental analysis to determine whether or not investing in a particular company is right for you. Number 4, taxes. Now there are a couple things that I want to cover when it comes to taxes, and it's just the difference between short-term capital gains and long-term capital gains. Short-term capital gains are gains you make from selling assets you've held for a year or less, and they generally are taxed at the same rate as your ordinary income, anywhere from 10% to 37%. Long-term capital gains are gains from the sale of assets you've held for longer than a year, and they are typically taxed at lower rates than short-term gains and ordinary income, from 0 to 20% depending on your taxable income. That's it. I hope you enjoyed this video, and again, if you didn't catch my last one on budgeting and saving, be sure to check that out right after this. Thanks.